over to TradingView and see if we've hit our take profit target yet. I know that with the trade day account we had another loss during the London live stream. That happens. I mean, we got stopped out right here. All we did during London really was consolidate. Then heading into 5 a.m. we took the sell side liquidity below this low, and then we immediately displaced, pushing further and further to the upside. On the 5-minute we shifted structure, so I slowly scaled in my entry, and I actually managed to get my entry in right here on this little fair value gap. This is a new 25k account. I'm trying out 25k accounts because theoretically, according to the profit target and your drawdown, your margin that you have available on that account, there's basically zero to no difference between those two. You have $1,500 drawdown and a $1,500 profit target. So I just wanted to test if it might be easier to get a payout going for the 25k account. There's no real difference in price, and also not for the activation fee. You save $10 basically. And the main difference is that you can request payouts $1,600 in profit. And yeah, that's $1,000 less than compared to the 50k account. So you have twice the increase in your profit target compared to only $500 more margin. Because in reality, the way we have to look at these accounts is really that, let's see, we almost hit our take profit target. There we go, we're stopped. Let's see if we funded the account. Yep, we're $88 above the profit target. That's how I started to play these Apex accounts. I'm buying 2 or 3 of them. And this morning I bought 2 25k accounts because I really wanted to see, and I really want to add a 25k account to my portfolio just to see, like, in reality you can still use 4 mini contracts or 40 micro contracts. But the main difference here is that you have $500 smaller trailing drawdown, but does $500 make it, does that extra $500 cushion right here, if I head over to Apex, I can show you what I'm talking about right here. Now we don't want to go to the membership information. We simply want to go to Apex, apextraderfunding.com. So the question, because the 90% off sale is only lasting for 14 hours. So guys, if you're watching the stream and you want to secure yourself that offer, then make sure to do that today. There's also an affiliate link in the description. That's the way you can support this free stream. Oh, actually, let me turn on the monetization here. Done. All right, so with Apex, the question someone asked me actually on Discord, and that really made me think, like, why do people choose the 50k account and not the 25k account? And really, if we take a close look, there's no good reason. And that's what's, let me think about this entire topic, because really, don't worry about these numbers. This is just simulated capital, 25k, 50k. There's no real difference. The only importance is your trailing threshold. So here you have $1,500 trailing threshold, and here you have a $2,500 trailing threshold. Meaning that once you're funded, you have to get above that trailing threshold in profit in order to request your payout. So here we get an increase of $1,000 of our margin basically. So we're basically trading a $1,500 account with lots of leverage, and here we're trading a $2,500 account, but we have a, compared to the 25k account, a $1,500 larger profit goal. And really, if we just calculate the ratio, we end up at a 1-to-1 threshold to profit goal ratio, because we have the same amount of threshold compared to our profit goal. And here we have a slightly worse risk reward. We can lose more. Yeah, I give you that. I thought that we only get a $500 increase from the 25 to 50k. So I guess you just get a little bit more room to breathe at still an acceptable ratio between your profit goal and your threshold. For the 75k account, well, you only get $250 more in your threshold, so in your margin. So really disregard what's on top of here, 75k, 50k, 25k. What only matters is how much margin you have available to play with. 1,500, 2,500, and 2,750. And if we now do the math and we divide the profit goal through the trailing threshold, 4,250 divided by 2,750, other way around, 2,750 divided by 4,250, that's a ratio of 0. Here we have a 1-to-1 ratio. Here we have to reach a $500 larger profit target than our trailing threshold, and here simply said we have to reach a $500 larger ratio. So in reality, those two counts are pretty much the same. There's also not a significant price difference. Where it starts to become more tricky is right here on your 100k count, because here you only get a $200.50 increase in your overall margin, the amount of money that you can lose on your funded account. It's just $250 more or $500 more from the 50k, but yet you have to now reach twice as much in profit compared to how much threshold or margin you really have. So anything below the 70 or above theoretically the 75k account is just so much harder to pass. Like right here, we see, okay, it's getting a little bit easier on the 150k account. You have $5,000 trailing threshold, but you also have to reach a $9,000 target. Here on the 250k, it's even more than twice, so 6,500 times 2 is 13k, and you have to reach 2k, even more than that. I don't know, just started comparing it, and I really thought, okay, a threshold of 1,500 and a profit goal of 1,500, that really does sound good. And especially if you struggle getting payouts on your 50k accounts, it might be easier. It's psychological, I'd say. You're getting closer and closer to the payout and you don't want to mess it up. Here on the 25k account, you basically pay the same amount of money for $1,000 more margin. I would still pick the 50k account, to be honest, but it might be easier to request your first payout, because if we head over to the FAQ section and type in payout questions, now we have to search for how do payouts work. For the 25k account, you only need to have $1,600 in profit in order to request your payout, and on your 50k account, you need $1,000 additional in profit. So I don't know, if you just started trading, maybe the 25 account would then be best for you. That's the required minimum balance to request a withdrawal. You can withdraw the entire safety net like they explain it here. Maximum withdrawal. So you can basically withdraw $1,500. Once you reach the $1,600 profit target, you just have to understand that this account is gone then, because you have that trailing threshold, and it only stops trailing once you're above 2,600. If you're above that, your trailing drawdown is locked in at 25. So everything you make above that, it stops trailing with your balance. So yeah, just want to see, gave it a go. I bought 2 accounts. And yeah, really, since I saw the sell side being taken and we quickly moved away from the sell side liquidity pool, I started scaling in with that 25k account. Added some on the 50, and then as price moved up higher with my final take profit target, if I turn on the execution right here and right there, so roughly around the 50%. It doesn't matter anyway, the account's done. And yeah, well, it's some sort of a method how you can approach Apex Trader funding accounts. Why does it work? Because you get the initial 90% discount, so it's really cheap to buy accounts in bulk, and you don't have the yeah, what is it called? The consistency rule that you, for example, have with trade day, where you need to maintain your biggest winning day to get funded can't be larger than 30% of your overall profit target. So we keep that in mind. And yeah, see how that continues. But that account is done. We took a loss on during the London session this morning, ended up being a little bit more than I anticipated. We took the market structure shift right here, entered on the fair value gap, breaker block, and some partials right here on this bullish fair value gap. We had the momentum to the upside after taking out this low, but unfortunately not enough. We got a new hourly candle, which eventually delivered into sell side liquidity below. And yeah, then we ended up here basically. Other than that, this was really a really nice setup. Unfortunately, it didn't play. We didn't even reach Asia buy side. We did on NQ, and NQ is actually running further towards the previous day's high. Also didn't get very close to the previous day's low if we directly compared with ES. Right here we have the previous day's low, and up here we have the previous day's high. So we can already see NQ is currently much stronger. We took out the Asia high, made a higher low and a higher high. So let's see what we get at the 9:30 open. If we get our displacement, I take another trade on the trade day account. I'm done with Apex today. Last week I had another Apex 50k account. In the evening during the PM session I was a little bit bored, and I tried to just see what I do if I completely disregard my risk not disregard my risk management, but simply really scalp with price action. I had my market structure shift, and on every up closing candle I entered one contract short. And because we had a nice trend during the PM session, I managed to pass that funded Apex account. I think we spoke about that earlier on the VIP chat. Yeah. Those were the micro executions, and they were really quick setting up the funded account as well. So I was able to enter on this 15-minute bullish fair value gap here. I secured profits before I think on that one I got stopped out at break even. Yeah, on the funded one. So many different accounts, it's hard to stay on track with that. So we will see. Nasdaq's looking like it wants to take out the previous day's high. If we take a look on the 15, we had the same market structure shift setup, but before getting filled on any of our bullish fair value gaps here, we actually already cleared the buy side liquidity pool, which if I would have been trading Nasdaq, I would have cancelled the limit order. And then we had a nice little new market structure shift, but only on Nasdaq. On ES we didn't see that really. If we go to the 15, it was too late. But on Nasdaq we had a new market structure shift right here. We left behind a bearish fair value gap. Basically exactly the same setup. We have our breaker block. We have our bullish fair value gap. And we enter right here where everything overlaps. After we get the confirmed close above, our stop loss would have been this low. And our take profit target with a 2-to-1 would have been really big, because we get an entry relatively up high. So maybe a stop loss like this is what I would have used in the end of the day. 2-to-1 risk to reward, 60 points on NQ. We will see how that plays out, but that's the current setup. We had a similar story down here where we shifted structure above this high, leaving behind fair value gaps, but we have already taken the current high of the day, the Asia session high, filled in the entire new day opening gap, and rejected to take out sell side one last time. So some sort of a little bull trap. Buy side liquidity taken. Top right. So that's done. We made a lower low. We displaced above our most recent short-term high. Filled the fair value gap and delivered further to the upside. We didn't see the same thing on ES. ES is really, I don't know, not playing nicely. Let me turn on the indicator here quickly. So we have the new week opening gap here. Is that the new week opening gap? yeah, that's a new week opening gap. That lined up with the Asia buy side. We didn't hit Asia buy side, so we continued lower. That's why I was still okay getting into this position. 9 a.m. new hourly candle. And really just looking at the hourly, like, yeah, we got an A trade. Unfortunately, we've been stopped. But yeah, during an hourly chart like this, during London, you can't really expect to make a profit. Depending on your strategy, if you secure after 5 points, I think you would have gotten a chance if you stuck to the 15-minute fair value gap. Right here. No, not even on the 15, you would have hit a 5-point target. So just bad luck on this one. Second day or second London session in a row where we lost. So we will see what's happening today during New York. We will go to our 5-minute time frame. In terms of buy side liquidity, we just hit that new day opening gap. We still have a bearish down closing candle. Took out the Asia high. That previous day's low looks pretty juicy to me, gotta admit. So maybe we continue up a little bit higher during the New York Open, get our displacement. But let's also take a look at the DXY. DXY has been on a very strong rally from the opening today. So we had our pullback, we moved up, consolidated during Asia. Then we started to put in place these higher highs and higher lows. Right over here is when we saw the market structure shift inside our daily bearish fair value gap, this huge red box. And we also had our fair value gap entry right up here. We've hit that and we analyzed the same thing, but just flipped on its head on EU. And during the London live stream, we managed to catch a 2-to-1 based on the same analysis. We took out the low, shifted structure, left behind the bullish fair value gap in this case, and we hit our 2-to-1. Placing our stop loss even one tick below this low. And with futures, we do not have to worry about spread. With FX pairs, also have to understand it's a counter trend trade. The trend is bearish, we get a long signal. Same way, but flipped on its head for the EU traders. The DXY is in a bullish uptrend, so understanding taking a reversal setup could always end up being just a pullback. That's basically what we did right here. And we continued putting these higher highs and higher lows in place. Right here we had another sort of displacement below this low. We reacted off the bearish fair value gap, continued lower, 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 made a lower low right here. But eventually if we go to the higher time frame, we don't really see a market structure shift here. The only thing that we see is a high, a higher low, a higher high, consolidation really, a higher low, and already a higher high. So we're still in bullish market structure by just looking at the 15-minute time frame. That's why I really like the 15-minute for potential reversals. We took out the SPY side. We're now inside the NFP news candle inefficiency from last Friday. That's our daily bearish fair value gap. If we take a close look at that, so the DXY has been rather bullish today. We're already above the 50%. We almost filled in this entire inefficiency. Looking at it on the 1 hour time frame, well, we spoke about this setup. When was it? I think during yesterday's London session live stream, where we saw a market structure shift and reacted off the slowest 15-minute order block. And from here we've sort of been on this rally back into the daily bearish fair value gap. Took buy side, we almost filled in the entire inefficiency. So let's see. At some point it will be healthy to expect a retracement, but right now the trend is bullish and we're not really here to call a top unless we see a nice and clean 15-minute market structure shift below this level. I would still frame higher prices for the DXY. We're already above the 50% of the daily bearish fair value gap, so we just keep that in the back of our mind going into the New York session today. DXY being bullish until we see something confirmed here on at least the 15-minute time frame. Here on the 1 hour, this would also be a short-term low. A fair value gap continuation after taking buy side. Interesting. 15-minute. There's no reason for me to go down to the 1 minute and say, oh yeah, we got a market structure shift. We can short or we can go long on Euro US dollar. You can, but this would sort of more be a scalping trade for me. You want a market structure shift to happen on a higher time frame than that. And right here, if you would have taken that short with this fair value gap on Euro US dollar, for example, you would have seen a new internal setup right here. New market structure shift. We form a low, lower high, lower low, higher high. What do we leave behind? A new bullish fair value gap. And we moved up into buy side liquidity from that bullish fair value gap. This would have been my exit if I would have been short from right here, this bearish fair value gap. We form a low, lower high, lower low. So everything's working according to plan. But really, if we see that bullish market structure shift or the displacement to the upside, leaving behind a nice order block right here, these two down closing candles, being in an overall uptrend, it's really not worth it holding on to that position if you see something obvious going against it. So after taking the buy side, we are now inside this bullish value gap on the DXY. On the 15, we only wicked the high. We're above, or we reached the 75% level of this entire daily bearish value gap. I think at some point we're gonna see a drop because, I don't know. We don't always get these perfect trend lines. Once you see them, most of the time they will fail. But yeah, in order to confirm shorts for me or longs on the Euro US dollar, I'd like to see at least 15-minute market structure shift. Right here, we also have some SMT divergence. Let me get rid of this analysis from London. Yesterday's London sessions short hit 4 standard deviations to the tick, and that's where we got our reversal from. We spoke about that earlier during the stream. During the London session, we hit that 4 standard deviation, and right now we sort of have, we have valid SMT divergence between the EU and DXY, because right here we see we made a higher low on euro dollar, but we made a higher high on the DXY. But we don't usually trade the DXY. We only trade inversely correlated assets. And so right now I'd still believe that we would take out the slow here. That's what we would like to see before the market structure shift, and maybe they return into, I don't know, premium discount. We almost filled in this entire NFP inefficiency. We got our market structure shift above the previous day, previous week's high on EU. We outlined that during the London session. Played out super well. Maybe even the high of the week, we will see. We do not have too many news on the calendar. So after this pump or dump on the DXY, we start to see a retracement into, I don't know, we could see a retracement towards the 50%, measuring from the low to the high. 50% would come in somewhere at 1.06560 or some sell side below that. Getting a pullback to take out some short-term highs, because all we really did here is lower high, lower high, lower high, lower high, lower high. Really never took out any major buy-side liquidity since Monday. So expecting some sort of pullback, can work, but the overall trend is bearish for now. Let's see what we're working with on ES, or if we have any questions here on Discord. Any questions, guys? Just recapping what we are dealing with before we head into the New York Open in 8 minutes. Understanding that the DXY is bullish right now, doesn't have to remain bullish for the entire day. We have SMT divergence with EU. We're inside a daily bearish value gap that we almost filled in completely. Has been bullish during both London and Asia. Looking at the 15. Right down here. Let me draw in the Asia box here. Until midnight. So an expansion during Asia. From midnight really. The slow towards 5, 6, 7, 8. That's what I would refer to as my London session. Even if we say it starts at 2 a.m., we still see that pretty much the same narrative. Asia trended to the upside, London trended to the upside. If we do it like this, Asia, London, and now we're in New York. We already swept the London session high. We still have the, let me make this red, the Asia session low, the New Day opening gap, and the London session low. It might be a target for some sort of a retracement, and lower prices on DXY would lead us to believe that we will see higher prices on the indices, and we seem to be doing that already 5 minutes ahead of the market open. So NQ actually took out the previous day's high. Right here during London, we also spoke about the 5-minute PM session 2022 model that we saw. Right here, market structure shift bullish, retrace into a fair value gap paired with the breaker. And during London, or on NQ actually today, what we did is we retraced lower, 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 back inside of this bullish fair value gap and the breaker block. That's actually what kept holding support here. If we get rid of these drawings, that might be a bit more obvious. This is our new week opening gap, but the indicator is doing that for us. You can see that right here from this low to this high on the 15-minute time frame. That's where we kept holding support to deliver into our target, previous day's high. We're still above the previous week's high as well on NQ. Both these levels, we're still below that on ES. Let me actually get rid of the drawings here. I did that manually. That's our previous day's high, previous week's high. So while on NQ, we're above these levels now. Even 5 minutes before the open, we got that push in. We would have hit our 2-to-1 risk to reward based on the second try after failing for the first time on the 2022 model right here. Bullish fair value gap right there. Taking sell side liquidity, so taking the Asia low, taking the Asia high, taking the low again, and then it moved to the previous day's high. But at least we're moving cleaner, I'd say, than we moved yesterday. We can actually see nice above the previous week's high. The entry would have come in at 7:30, a little bit earlier, but it played out. Kept holding on that breaker block paired with the bullish fair value gap and backed up by the midnight level after just having taken sell side liquidity. Taking a look at ES, 3 minutes before the New York Open. Right now, relatively speaking, we're at the high of the day. We also had that last push to the upside. We took out the Asia high. We still have the London low down here, paired with our previous day's low. Sell side. Let's make this 12. London SSL being our low of the day. And put that to the right. Right here we have a PM session high, previous day's high, and of course Friday's high. And we still haven't taken it here on ES, so that could help us to believe that we continue higher within the next 2 minutes. NQ already cleared all these objectives, so yeah, really in terms of higher time frame targets for NQ, the next targets, in my opinion, would be, let me hide the indicator here quickly. We've already got them on our chart. That's all low time frame stuff, so I put that in a folder so I can hide it when I'm on the higher time frame. Settings, visibility. I do not want to see it on the daily and on the weekly, nor do I want to see it on the monthly. If we turn on the main daily analysis, we're right here on this trend line now. If we connect these two highs, we did the same thing on ES here. If we take a look at ES, the trend line actually had 3 touches already, but we can see ES is really lacking behind NQ basically. The next buy side liquidity pool, in my opinion, would be this daily high right here. Let's see if it's also a weekly high. That would be weekly buy side liquidity on NQ, and on the daily, this would be this high right here. I think 15,471, 15,338. Visibility, yeah, that's why I didn't see it. Go back to the daily. So this high would be a weekly high. This would be daily buy side liquidity. We're about to retest the trend line, see if we can break above it with the New York Open, and yeah, simply continue the rally. Therefore, we would believe ES is at least going to take out the previous day and week's high, which is from right now, yeah, less than 10 points away. So I think that's really realistic. Let's log into our paper trading account, not to the TraderWeight account, because we're only going to log in there if we see a 2022 model. And yeah, with the New York Open being bullish like this, ideally once we clear buy side liquidity. So right now we're just going to take a look at it. And if you guys have any questions, time to ask us now. Let's let everyone know. Let me check out YouTube and see if we have any questions. Your screen looks frozen. Yeah, it indeed looks frozen. I'm not sure what's happening. Something's not correct here. Yeah, the Discord live stream. Okay, hang on. I'm gonna get the live stream members also access to that. Thanks for letting me know, Fade. What's happening with regular? Yeah, looks like the Discord stream is frozen. The YouTube stream is frozen for whatever reason. Let me copy that link here quickly and see what we're dealing with. But why is it frozen? That's the question. Got stuck. We're pulling back on ES. Let's see if this bullish value gap holds support. That's what I would anticipate right now. Only if I see a displacement below the slow, I will engage on the TraderWeight account. Otherwise, I'm going to sit on my hands, take a look at NQ, see if it's also moving to the downside right at the open. Okay, like the image is frozen, but stop streaming. And it's still frozen. That can't be right. Properties. Display capture. But there we go. Now it should be working. Let me make sure it actually does on YouTube. Refresh the stream here. Let's see, there's a 1 minute delay, so we should be getting something in a couple of seconds. I go back to the indices right now. We rejected right at the New York Open. 9:30 candle, 5 minute time frame. Yeah, I want to see a strong close. Let's see what the 15 minute looks like. 1 hour time frame, also rejecting right from the opening. 5 minute time frame market structure shift or the displacement would come in right here. I'd wait for the fair value gap and then log into my trade account. We want to make sure this is not just a stop hunt prior to the expansion further to the upside. So if we get in short, we want to see it close below exactly this level right here, 4376. Not just wicked, leave behind a inefficiency, and we take it short from there. Let's see if the YouTube stream is catching up. Yeah, perfect. It's not frozen anymore. We have full HD quality as well. Yeah, just 1 minute behind the Discord live stream. If you want to join the Discord live stream and get access to Ask Me Questions, the link for my WAP shop is in the description below. And while Price is doing these funny things, let's give the permissions to the live stream pass to send messages and embed links. Also allowed to do all that. Yeah. Read message history. That should be fine. Done. All right. You should be able to write messages in here now, Fade. Yeah, Discord is working just fine. Go back to trading view. So we actually closed below. Yeah, there's a big divergence on a 15. Having cleared the previous day's high versus not having cleared the previous day's high. We've been talking about that. So initially here on the 5 minute, 9:15, we got the pump above the trend line. At least it looks that way. And we got rejected from it. Looking at the 5 minute time frame, we also get the structure shift here, or the displacement on NQ here, but with a fine difference. NQ having cleared the previous day's high, while ES didn't clear it. We get our market structure shift confirmed, yet we still have to wait for the fair value gap to form. If you do not wait for that, you could also just anticipate price continue immediately lower with the bearish momentum from the open of this breaker block right here, the lowest down closing candle. Breaker block. Here we have our VWAP, we have the London buy side taken. We didn't even take out the PM session high, but I mean, we got the confirmation here on the 5. Let's wait for this 5 minute candle to close, maybe we leave behind a fair value gap. Then our entry would look something like this. We yet again have to take that with micros. A 2 to 1 would take us to the sell side liquidity pool from Friday, below the previous day's low. So we're gonna leave it like that. We still have 3 minutes to go. Take a look at the DXY. In order for this to work, we really need the DXY to continue its rally. We already had a London and Asia session uptrend on the DXY, but could be looking good. They could be looking like a pump and dump. So I'm getting ready to hop on into it on my trade day account. We're gonna open up the micro chart. So if you take the breaker blocks entry, that would have been the entry right here. I will wait for the fair value gap to form. It's at the same price level. We have to wait for 2.5 more minutes. Right now we're touching the midnight level. And I also want to see the 8:30 open and the RTH open. Let's wait for the ICT all-in-one indicator to load up all these things. And also we want to put the power of 3 candle 40 points away from where it is right now. And looking at the entire daily range, we're below the 50% now. So what we want to avoid, that basically what it is that we open at 9:30 to retrace into a discount still for higher prices. If we want to see the setup playing out, well, we will see in 1 minute. We are at the midnight level. The breaker block already delivered 2.5 points, especially with NQ having taken this high, SMT divergence and all that. Even here, just looking at these 2 wicks. So really, if you want to catch the momentum, the breaker block entry, we'll see how it plays out. If it's a true pullback, or true reversal or just a pullback to stop hunt some of these longs that are in the market after taking out the low right here. Stop hunt them quickly, go below the 50% and reverse back up, continue further to the upside. This would coincide with the DXY reversing, dumping to the downside. Daily time frame candle is still bearish and Q displaced. We're below the midnight level now. Like I said, only gonna take an entry on the trade day account if we get up into this. We have our 2-to-1 set. 13 seconds to go. Possibility there that this model is just a stop hunt is always there. We target our 2-to-1 right here. We close above the midnight. 8.5 points risk. We want to risk 250 bucks to make 500. Let's do 7 here. 288 for 577. Press sell limit and see if we get filled. We got this set up really early on, right at the 9:30 open. We just do the same thing day in, day out. See how it works. We got the market structure shift confirmed. We have our fair value gap paired with the breaker block. It's a big fair value gap, and the potential that this move right here to the downside could have been a Judah swing to the downside, and then maybe on the 1 minute somewhere around the midnight level we get our market structure shift to the upside, and we actually take out all the buy side above us. We will see how that plays out. It's a valid setup. It would suck if I wouldn't place my limit order here, and it works out, so we're simply gonna stick to that. We have our 2-to-1 set. Previous day's low, take profit is below the previous day's low, so we will see how we manage our risk here. Simply set and forget, 2-to-1 risk reward. Stop loss is above the protected high, apparently, unless it's a Judah swing. And Q is pushing to fill the fair value gap. DXY is now starting to reject from the high. So let's see, I think we should get our fill pretty quickly, like I said. Yeah, there we already filled. We want to avoid this actually just being a Judah swing, so we want to see rejection from the breaker and this bearish fair value gap, and a smooth run into our take profit target. If we measure standard deviations from our last manipulation move, one standard deviation would take us 1.5 would deliver us into the previous day's low. Let's take a look. 2 standard deviations realistically could take us into our take profit target, which is this sell side liquidity pool from Friday. We will see. A setup is a setup. We do not judge a book by its color. Rule number 1, displacement. Rule number 2, inside the kill zone. Rule number 3, fair value gap breaker block entry. Check. Everything else except that, other than managing our risk properly and setting our risk to reward ratio that we're looking for. We can't do that much. Am I going to take the setup on my newly funded account? Now I'm already up to 100 for today. I think I'm going to leave it at that. And just going to trade on the trade day account. Let's see if we have any questions on. I place a limit order of 5 micros, risk of 212. Let's see how it goes. If the third time is the charm, or if we get faked out for the third time here after a 5-minute market structure shift on ES. Oh, NQ is not stronger right now. Like we spoke about, we do not want this to be a retracement into roughly the 50% of the daily range, which would come in right here. We retrace below the 50% and immediately reject it up, back above the trend line, back above the previous day's high. We want this to reject and the DXY to continue higher. Right now the DXY starts to pull back after making a higher high here, and in order for the short to work, we really want to see the DXY to continue higher. Otherwise we simply get stopped and take another loss. There's no shame in that. And like we spoke about, this happens to be a liquidity sweep of the long positions that have been put in place on this move to the upside. So instead of simply continuing higher, right with market open, we get our Judo swing to the downside, clearing sell side liquidity below the 50% after having executed or finished that job. We start to push back, ignore the fair value gap, and with the DXY continuing lower, we will see pushing further to the upside. We will see though. We have reason to believe that we continue lower towards the sell side liquidity pool. You could also enter off the 50%, but I don't know. There's always the risk that we do not make it up to the 50% and you miss out on a trade where, the technicals were there. We had our market structure shift. You just missed a perfect entry at the 50%. Bearish fair value gap. Let's go into the settings and turn on our midline right here. An entry like this would offer a better risk to reward ratio. But the entry is not guaranteed. If you reject from the breaker block and you're annoyed that you didn't catch this trade, then don't take 50% entries, especially on these big fair value gaps. Take the low-hanging fruit entries, even though it means your risk to reward is worse than it would be with your 50% entries. Simply stick to one and don't cry about it. That's how simple it is. I stick to the low-hanging fruit entries at the low of the fair value gap. If I see it continue higher, I sometimes add to the position. That's the way I trade. All right, let's take a look at the YouTube live stream if that's still running smoothly. Yeah, that's still running smoothly. Just above the breaker block, old swing high, up close candle, would that be referred as a bullish breaker? Hang on. Let me take a look at that. Bullish breaker block. I gotta read that question again. Just above the breaker block, old swing high, up close candle, would that be referred as a bullish breaker? Well, if we look at bigger picture market structure, like on the 15-minute time frame, we formed lower lows and lower highs, formed a lower low, closed above, so we look for the highest up closing candle, which really would be this one right here. And yes, this would be our breaker block for the bullish scenario if we still want to deliver higher. But for the lower time frame, we saw our displacement to the downside with the fair value gap. That's what I base the entry on. That's what I'm going to stick to with the 66 days challenge. We will see. But this would be referred to as the bullish breaker block right here for the higher time frame. And if we go up one more time frame, we can really see price just being price right now. We expanded to the upside, retested maybe this order. I don't know. We're still inside previous days high, previous days low. Best setups happen above or below those. Could still be around the 50% level of previous day high, previous day low. It's a guess with a proper win rate, so don't make a rocket science out of it. Not every 2022 model is going to win. If you go to different time frames, you're going to see a bullish one if you're on the 15. Taking out the low, shifting structure above the high, without the bullish fair value gap really, only with the breaker block. Some sort of a unicorn model if you want to see that. But going to the lower time frame, you see that. Higher time frame, you see that. Sometimes, especially if you're trying to stick to a specific set of rules, it's easier to stick to one time frame especially when it comes to a ICT mechanical strategy. If you want to trade ICT concepts freely with your own analysis, then that's when you can bring in all these confluences. What's the higher time frame doing? Blah, blah, blah. We got our reversal setup from the high of the day with our breakup block and the bearish fair value gap. Let's say textbook setup. We take it. If it doesn't play out, we simply wait for the next one. Done deal. Not much thinking involved here, if we're being honest. Because if you would start to freely scalp, you'd be at the crossroad right now. Are we going to be bearish, bullish? We could argue for both cases, really. We had our 5-minute market structure shift, while on the higher time frame it looks more like a retracement into a discount to continue higher towards the previous day's high. Which one you're going to pick? And then you enter short, you see reasons why it could go long, and then you, I don't know, for a daily bias, honestly, while being in this range, I would simply refer to the DXY. DXY has been bullish the entire day. For my bias to shift, I want to see a clear 15-minute market structure shift. NQ, let's take a look at NQ. Maybe that can help us. We bounced off the previous day's high after just sweeping that liquidity and continue to push up higher. This could be an early sign that we want to continue further to the upside. Take out that weekly buy side right here at 1537. Yes, it's also pushing now, and this could be a potential Judah swing. There's no right or wrong. We filled to 50% now. Most important thing is that you stay consistent with your rules and you stick to them. That's the whole purpose of this entire live stream, basically. Stick to the rules. Even if you're on a losing streak, simply stick to them and see what's gonna happen. If you blow the account, it's not the end of the world. You can simply get another one. I mean, these Apex actually ends their 90% discount, I think today. Yeah, within 14 hours. So if you want to grab a Apex account with a 90% discount, make sure to use the link in the video description. But Take Profit Trader, takeprofittrader.com, also has this offer going on, 40% off for life, plus no pro account fees, which is actually pretty cool, because that means that you end up basically saving 200 bucks with TPT, and you can get instant payouts up to 3 account resets. Right now I chose to do this challenge here with Trade Day because they have the lowest profit target for the 50k challenge between all the future funding firms. We'll see how that goes. We're pushing NQ likely about to make a higher high, this being a Judah swing. Let's take a look at the 1 minute. Took these equal lows, displays, but really only bounced off the VWAP. This could have been our only help here. No proper fair value gap being left behind other than this one, but we didn't tap it. Let's get back to a appropriate time frame. Making a call or a specific call what the DXY is going to do right here at the high of the day, high of the week. Pretty tough. Could go either way. Like I said, we want to see that market structure shift confirmed, the pullback. Then we can confidently say that we could target London lows and Asia lows and maybe some more lows. Some sort of a retracement after having filled in this entire daily bearish fair value gap. And therefore we could frame higher prices on both ES and NQ. But right now, let's check out the 1 minute time frame on ES here. Also no bullish fair value gaps being left behind. We're just retracing into this. We have the SMT divergence buy side just above us for our inefficiency. Judo swing to the downside. No proper displacement here. Not easy to spot. There's no short-term high displacement fair value gap entry on the one. But we took sell side with this judo swing to the downside, and that's the main objective really of the judo swing. Trap people into shorts, make it look like it's gonna go short, while the main objective really is to stop out the longs before continuing with the initial trend direction. Trading is simple until you start thinking, most of the times. Let's see, did NQ make a higher high? Nope, not yet, but it's about to. Yes, it's also closing above the 50% of this bearish fair value gap here, right at 930. We'll see. See if we have any questions. We really should have started this challenge last week. Last week we only had winning trades mainly. 8:55 bullish 5-minute candle. Thanks for that. Now I can check it out. 8:55. Now you can't consider this as a bullish breaker block. If we really take a close look at this. For a bullish, maybe a mitigation block. Nah, also not really. For the bullish breaker block, we want to see higher highs and higher lows being put in place. And yeah, I don't know, higher highs and uptrend, we displace, we reverse, and we continue lower to take out this sort of trend line liquidity here. And then this lowest down closing candle would become our bearish breaker block. This highest up closing candle would be considered as support if we still continue higher with the initial trend direction. But in order for it to be a bullish breaker, the chart would have to come from a bearish trend into a new bullish trend with the market structure shift, and then hold support on the breaker and continue further to the upside. So what we see right now, if we go to ES, higher high, higher low, higher high, lower low, higher high, that sort of would be, if anything, the unicorn model. And then we would wait for a close above this high, and the highest up closing candle would then become our bullish breaker block, because in this scenario we made a high and a lower low, and if we now make a higher high, we look for the highest up closing candle between our two lower lows to now support price. Hope that makes sense. So no, this candle is no bullish breaker block. Within an uptrend, yeah, you could only frame it as a old high. We got close above the high and we hold support on that 8:55 high to continue up higher. Something like this. Old high, highest up closing candle, that 8:55 candle, we hold support to deliver into another high after making a higher high. Then we do that same thing, but this wouldn't be considered a breaker block. For the breaker block, we need that market structure shift, displacement, and pullback. Hope you understood that. Starting to look more and more like judo swing. Yes, catching up with NQ here. But even then, catching that judo swing on a 1-minute time frame would have been pretty tough. We're inside that highest 1-minute bearish fair value gap. So our last level of defense before we get stopped out. And if we get stopped out here, really, that's just gonna be it for me today. I won't take another trade. We had our setup. If it fails, we will continue higher. We could look for longs into the previous day's high, previous week's high, simply for yes to follow what NQ is already doing here. NQ already made the higher high, really showing here, all it's showing here is pure strength. 15-minute happened to only be a wick below the 50% to take out some long positions that wanted to see the New York Open to do the exact opposite, simply continue higher and take profit, maybe around the SPY side at 1536. Stop them out quickly and still continue into the initial trend direction. Same goes for ES, but with a smaller range. We form higher highs and higher lows. We take out higher lows below the 50% of our entire daily range. Take out that sell side. Done that, bounce once again off the midnight level. Next target, of course, would be 4385, the PM session buy side, the previous day's high and the previous week's high. If we fail, yeah, we already closed above our 5-minute inefficiency. That's a terrible sign for this short. On the 15, no clear sign for a market structure shift, and we will get stopped out. It was worth the try. Oh, we already stopped out. So that's done. Lost a little bit today. Executions wise, do we have anything that we have to cancel? No. But like always, two scenarios that could play out. We're either gonna hold this market structure shift and deliver into the previous day's low or London sell side, or like we spoke about even before placing our entry, what we do not want to see is it to actually be a Judah swing, take sell side below the 50%, and then shoot back to the upside. If this candle is gonna close like this, we spoke about doing damage to all the longs that are in a position right now, trap shorts in the market, quickly liquidate these shorts after liquidating the longs, and then easy for them to build up positions because longs get liquidated, they start selling. When they start selling, market makers can start buying aggressively to continue towards the initial target being Monday's high and Friday's high. Well, a bit unfortunate here on the 5. If we close above here, we would have a bullish breaker block with a unicorn model to the upside for a little scalp maybe. But for the trade day account, that is going to be it. So we're down 631 today. We've been bento book, we've lost 331. And now we're down 631, so we basically lost 300 bucks on that trade. I think. 631.38. 331, yeah, 300 bucks during the New York session. So we add that to the, not the take profit trader account, but to the trade day challenge. Minus 300. Once again, we chose MES. One with 7 contracts. We went short. We had a 2022 setup during the New York session. Happened to be a Judah swing. Taking sell side. Short-term lows below the 50% of the daily range. We spoke about this being the bullish Judas. Let's grab a quick screenshot of our short. And add that trade. All right, so far reducing trades. acceptable. We will see. Maybe we even blow this account at the beginning. Then I'd simply start over. But yeah, keep doing the same stuff over and over again for these 66 days to see where we end up. At the beginning with a little bit of a losing streak. 3 losing trades in a row. But on Monday, I mean on this trading day, at least we didn't participate on any, well, we didn't even get an entry opportunity during yesterday's New York AM session. During the PM session, we would have gotten it, but it also wouldn't have hit a 2-to-1 risk reward. We retraced during Asia and London. We didn't get the market structure shift entry right here on ES for the longs, and it would have also been past the kill zone. We are closing above this high by the looks of it. Right now, could look for the highest up closing candle here on the 5-minute to become our bullish breaker block with the unicorn model. So looking for a retracement and a continuation higher is what we would do now into our targets being the previous day and previous week's high. NQ is also strongly pushing. Maybe it's even a good start to the 66 days challenge. Starting out with losses makes the comeback even stronger. All we care about is sticking and staying consistent with our rule set. We've done that. 5-minute market structure shift, fair value gap. In some cases, that's simply gonna be the Judah swing. Came from the high of the day. The only thing that we didn't really have was sweeping external liquidity. I mean, we took out the London session high right up here with this 930 pump. So we could have believed this is a pump and dump scenario. Ideally, this would have been better if we would have seen this pump actually continue above this buy side and then getting the setup for the short into the opposite liquidity pool. Or depending on your rule set. Took that PM buy side. Like we spoke about on the 5-minute here, this would be our bullish breaker block. Done with trade await for today. Let's look into our paper trading account and see what we can do. If we can reach these levels right here, look for the highest up closing candle, which would be this one right here on the 5-minute. If we look for this entire 915 candle, wouldn't really make sense. It's just too big. Like this, we can trap price a little bit easier. We rebalance this candle. We have a new bullish market structure shift, and that's basically the ICT unicorn model. Bearish market structure shift immediately displaced with a bullish market structure shift. Now we would look for entry longs on things like the inversion fair value gap right here. The bullish fair value gaps. So let's see if we hit the inversion fair value gap. I'm going to add 1 contract on my paper trading account. And if we continue towards the opening price, I'm also going to add 1. My stop loss is going to be right here below this theoretically protected low. And if we fail both the long and the short, then we're in seek and destroy conditions where we take sell side, buy side, without giving any proper setups. Looking at the daily time frame on NQ, we're not far away from our weekly buy side liquidity level. 15-minute, 5-minute, sell side, but didn't really close below here NQ at least. Pushed above, so likely on Twitter. If you're on Twitter, you're gonna see something like this from many other ICT traders as a unicorn entry. We will see if it plays out. We have it set up on ES. We're filled with 2 contracts. Gonna scale out. Sell 1 at the high and sell another 1 up here. Yeah, a losing streak without any mistakes like revenge trading because we've lost is still consistency, and that's all we're after. Part of it. Take a look at the YouTube chat. A link for the journal platform should be in the in the video description right here. My trading journal, BentoBook, bentobook.io. You can check that out. They currently have a 15% discount for your first 3 months. What did I want to say? Yes, held to 4-hour fair value gap. Shouldn't one have looked for a long entry above the 4-hour fair value gap? That depends on your approach, really. I'm looking for the 5-minute market structure shift. If you do free analysis and you sort of rely on your instincts and your analysis and not sticking to a specific model, my model is market structure shift from a high of the current daily candle using the power of 3 concepts. Market structure shift, bearish fair value gap, all that lined up. Losing trades are part of it. That's simply what it is like. Let's see the 4-hour fair value gap. I don't see which 4-hour fair value gap you're talking about. This one? Well, this one? The bearish fair value gap? TC? Hard to tell because, yeah, I don't know. Longs above the 4-hour fair value gap. We have so many things on the 4-hour. I don't know. It could end up in analysis paralysis. That's why we simply stick to one model following this and look at lower time frame price action. The DXY is starting to pull back, maybe going to shift structure. That's really going to be the confirmation for me to look for more longs. But for today, I'm done on the funded accounts. Yeah, so please elaborate which 4-hour fair value gap you're talking about, TC. Would really help me. Held the 4-hour fair value gap. The only 4-hour fair value gap we held was the bearish one yesterday. I mean, we touched it. And all we did on the 4-hour is here consolidation at the high without retracing into the bullish 4-hour fair value gap. And our daily bullish fair value gap here, that's really what initially also led to me believe that we could see retracement into the previous day's low, because we actually had a bullish fair value gap paired with this. We could be forming some sort of a evening star pattern, a initial retracement, and we would have been filled already down here for this reversal setup. Yeah, basically just playing the probabilities here. There's no right or wrong, even with ICT concepts. It's just a way to look at price action and interpret it in a specific way. Some people say, no, you can't long above the 4-hour fair value gap. Some people say, if you get the setup below it and you have a good gut feeling, why not? And then you mean the NFP, this one right here. Yeah, kind of held it. I mean, we closed below inversion fair value gap right here. Look for longs above that. I mean, where's the rule written in stone that you can only look for longs according to ICT above a 4-hour fair value gap? Why couldn't we continue lower to fill some of the inefficiencies here, take out the previous day's low, equal lows right here? I don't know right now. Really looking at the 4-hour, we're in job. Usually you would avoid that and wait for the trend. We're in a bullish trend. We look for the short. We didn't look for a reversal all the way to the downside down here, like below all these lows. We simply looked for a short into a obvious sell side liquidity pool, being the previous day's low. Let me turn on the indicator again down here, and maybe a little bit lower into some Friday sell side. Nothing wrong with that, really. Got our displacement, but unfortunately ended up being a yeah, Judo swing to the downside, we immediately displace to the upside. We've got filled with 2 hour free contracts, chasing that unicorn setup after, well, that's basically followed by the Judas model. So many different creative names for basically the same thing. Take a look at NQ. NQ also retraced, holding the bullish breaker block. Let's see, 1 minute time frame. We took out the short-term low. November 3rd candle. Let's take a look at it again. November 3rd. 6. Mate, there's no bullish fair value gap. The bullish fair value gap is down here. We never got into it on ES. So we can't really say it kept holding when we never touched it. Like, then we could also say this fair value gap kept holding, this fair value gap kept holding, this fair value gap kept holding without ever retracing or touching it. Doesn't really make a lot of sense. Only if we bump into it, taking out this sell side liquidity here from Friday, then we could say, yeah, okay, it actually kept on holding. But if we never get into it after the creation right here on Friday, I think it's fair enough to look for a short into it. We also had the daily bearish fair value gap lining up perfectly with this 4 hour fair value gap. Actually a little bit higher than that. So I hope that makes sense. We can say that the inversion fair value gap is holding, or that this bearish fair value gap right here didn't hold because, yeah, we actually got into it, but we never came into the daily bullish fair value gap down here, or the 4 hour fair value gap being down here. We cannot say it holds. It's not like 2 magnets on the opposite side and pushing each other away, in my opinion. Check out Discord. It depends on the setup, day trader. If I, like for example right here, I took my entry on the low of the fair value gap, stop loss at the high, that's 8.25 points risk. Multiply 33 times 12, and we would end up at 33 ticks times 12.5. That is $412 risk. So I couldn't even enter with my risk management rules on ES. So yeah, otherwise I would have lost $412 on this short opportunity. That's more than I want to risk per trade. So I simply switch over to the micro contract, and here I can adjust my risk more precisely. I enter at the low, stop loss at the high, create my limit order, specify my dollar amount in risk, tells me I have to use 6 contracts, and that's the only scenario when I would use the micro contract. It's basically the same. Sometimes we have a little bit of a difference because liquidity is different, volume's different. But for the setups, I always look to the mini chart or mini contract. Hope that makes sense. I was in a trade and a short. I'm in the opposite trade right now. The unicorn setup right here of this breaker block and the bullish fair value gap. We'll see how it goes. Targeting the previous day and previous week's high. One more buy limit is being put in place at the new day opening gap, paired with this lowest bullish fair value gap inside the inversion. See how that goes. It's not the 2022 model, and it's not on the trade day account. That account is done for today. We stop after one losing trade. We had a valid setup. Looking forward to target a short from a high of the day into the previous day's low sell side liquidity pool. Didn't play out. Unfortunately, London didn't play out either. We will see. I think we have news at 10 even today. Some FOMC members speaking. I was initially thinking short also, but with all that consolidation above the higher time frame fair value gap, it looks more bullish until displacement. Yeah, like I said, ICT or looking at price action is really subjective in my opinion. I see the model, I take it, and yeah, stay more consistent. This way I'm not missing out on any opportunities, and I'm not getting annoyed that I'm missing out on a opportunity because I'm too hesitant. Let's say even if we just get a 50% win rate, in the long run, we're gonna end up profitable. Looking forward 2-1 from a high of the day with a market structure shift, bearish fair value gap entry. So we don't really have to worry about much here other than staying consistent. I get you why here on a higher time frame we had the bearish fair value gap. We had the no news days. I don't know, I'd say if you go back to last Monday on a daily time frame, we also didn't have news on Monday, and we had a pretty bullish candle right here. We also moved a lot, and yesterday we had a no news Monday and we didn't move a lot. I think that's paired with where we are on a higher time frame actually. So if we take a close look at that and hide all the drawings and all these annoying arrows, right here on a daily time frame, we bounced off the bullish fair value gap after taking out monthly sell side liquidity, after hitting the 50% retracement level of this entire swing to the upside from the Q4 low to the Q3 high of 2023. 50% comes in at this price level 4173. Took out monthly sell side, bounced off a daily bullish fair value gap. That's why I think the overall setup was there last Monday. We did not have any news. We had the major news coming in on, what was it? Wednesday, FOMC, Friday, NFP. So no news on Monday, but still we had a decent day. We had our reversal. If we look at it on, like, for example, the 15-minute time frame, and we go all the way back to our low, we had a similar setup, which also didn't play out. We had this pump up, displacement to the downside, bearish fair value gap entry, but already past our kill zone. Right here, 9:30, 10:15, we got the market structure shift confirmation, 10:45, 11 on 11 a.m. we would have gotten that entry for the short. I would have likely still taken that, targeting the new day opening gap, but yeah, not playing out. And then we got the, now that's already heading into the next day. Yeah, overall, I think you can say that Mondays without news have a lower probability of forming clean price action on days with news. But oftentimes on the days with news, traders always say, oh, we have NFP, FOMC news, we can't really, let's wait for the news. And they're not really certain because they are fearful of the news impact. They have to wait until after the news happened. So what you're going to do, you say non-news trading days, so Mondays are tough. News days are tough. Which days you want to trade? Like, really running out of options here. Hope that makes sense. Those are just my thoughts. NQ continues to push, holding the unicorn model right here, bullish breaker. Same goes for ES. Go back to the 5-minute time frame. I want to see the continuation of this breaker block. Let me turn on my drawings. Filled the inversion fair value gap and filled the bullish fair value gap right here. Yeah, but this yeah, can't be really generalized. It's the current trend, market structure on the higher time frames. We had the second most bullish week last week in the entire year of 2023. On Monday we consolidated, which could have been anticipated. Now on Tuesday, I don't think we can generalize it like that without more than 100 data points really that Tuesdays or Mondays without news are mostly bullish. I think it depends where we are at with price, what the seasonal tendencies are, where we are coming from, did we shift structure and all that. There are so many variables to all this trading, and the more you think, the more complicated it actually becomes. So you either think even more and make it work based on your thoughts and your analysis, or you simply stick to one rule-based approach, wait for your entry criteria to be met, and execute based on that. Think less, making it simpler. And even if we would have been, like we were wrong on the short, didn't play out, we also gave the reasoning before we even took the entry, saying that this could be a potential shooter swing. Like basically every 2022 model that's coming in could just be a fake out when we still continue up higher with a rough 60% win rate. We don't have to worry about that. We simply play the probabilities and we do not care about being wrong. Being wrong is part of our job. And yeah, even if you're wrong and you do not have the rules in place that stop you from trading afterwards, you could theoretically always play the unicorn model like we do right here. We have our breaker block, bullish fair value gap, inversion fair value gap. We took sell side below the 50%. We could measure our shooter swing to the downside, being measured from this low to this high. 0.5 standard deviations would take us perfectly into our previous week's high. 1 standard deviation would deliver us into, I think that's 4 hour buy side liquidity right here, paired with a daily volume imbalance. Yeah, so I don't know, hope that all that talking makes sense for you. Yes, I pay attention to the previous session high-low liquidity. That's what we did during the London kill zone on Discord with all our VIP members. We took the Asia low, we made lower lows and lower highs. We saw our displacement right here. We closed above the midnight and we entered right here on the breaker block. Unfortunately, we did never hit the Asia buy side here on ES. We retraced, filled some more limit orders down here for this 2022 model. Really seemed like it could play out, but with the new hour opening right here at 6, we started to dump down back below the London session low here at 240, from where we actually delivered into all our targets. Lined really nicely up. We measured the displacement from this low to this high, our last manipulation move, and we see how nicely the 4 and 3.5 standard deviations lined up with this manipulation move. That's why we had a good gut feeling that this could work. We had our stop loss just below the low, unfortunately being stop run. And then we continued further to the upside on Nasdaq. Nasdaq would be the only chart that actually delivered a setup that we could have taken after taking out the London sell side session liquidity, shifting structure on a 15-minute. It's a little bit cleaner. Take out sell side, close above our most recent short-term high, fill a fair value gap paired with the breaker block, and we continue to run from exactly there. So we took out the weekly buy-side liquidity pool on Nasdaq. That happened. On ES, we are out of our trade. We got filled on both the previous day's high and previous week's high from our breaker block entry. After initially being wrong about the direction, now ending up actually being right. Nice. So I think that's gonna conclude today's live stream, to be honest, guys. The The XY is still retracing. We didn't get our 15-minute market structure shift yet, but after taking the high, we pull back. Let's take a last look at EU. EU managed also to take out the low. Could be displacing above the 15-minute structure, high right here, to take out some of these lower high buy side liquidity pools. Asia session high, London session high, and all that stuff. All right, that was pretty good. We saw that sometimes being wrong doesn't have to mean that you're wrong next time. We caught the perfect unicorn setup. Shoes on. I hope you understood now that this 855 candle wasn't a bullish breaker block. This candle was, and look how perfectly we respected it with candle bodies, having more confluence below us with this inversion fair value gap and this 5-minute bullish fair value gap. Holding support perfectly, delivering into our buy side liquidity targets. Yes, I make sure I will. Yeah, all my targets have been hit. Of course, we could simply continue higher from here. If you're still in the unicorn setup long, next targets for me really would be 4400s, daily volume imbalance. We could also rely on the standard deviations further to the upside. Yeah, we took out the previous week's high and previous day's high now. We could simply continue from here or maybe pull back, fill in some inefficiencies, make a higher low, continue higher then. We will see how it goes. We had our target from our lowest entry. That was a almost 10-point move. That's pretty good. And yeah, unless you guys have any more questions, now would be the time to ask, because I'm going to end the stream here. We tried to short based on the 2022 model from the high of the day. Happened to be a fake out shooter swing. We waited for the confirmation close above, used the breaker block entry paired with a bullish share value gap to catch the continuation move to the upside. That would be today's recap. If we turn on our executions, right here, and that on the fair value gap and the breaker block, target right here at the previous day high and previous week's high. Could simply continue to expand like we spoke about. Next target would be for our buy side liquidity and daily bearish fair value gap. If we go back to our daily time frame or our higher time frame here on the ES1 chart, this is our 4-hour liquidity pool. I think we might have already taken that. Let's see. Yeah, we've taken that already. And now we're coming closer towards the old bearish fair value gap here on a daily, the bearish volume imbalance, and buy side liquidity would really be above this daily high here on Wednesday and above the daily high here on Tuesday. We will see how bullish we are if we simply continue the expansion. But yeah, I think we've done pretty well today on the stream. Tried the long, caught the lost on a short, one on a long. Overall, let's see. YouTube live stream. No more questions. I already answered that question, Omar last day or last aid. Other than that, yeah, if you want to trade with Apex on your TradingView charts, you have to make sure to select the trader weight plans down here. So not the first batch of plans, those are the rhythmic ones. Don't sign up with rhythmic. If you want to trade on TradingView like I do, use the trader weight plans. There's currently a 90% discount, 90% discount on these Apex funded accounts. If you want to secure one account before the offer runs out in 13 hours, no, not testimonials, make sure to use the support to support the free live streams here as well on YouTube. There's a link to Apex Trader Funding right here. Also to Trade Day. That's the account where I'm currently doing the 66-day challenge, staying consistent using ICT concepts. They have the lowest profit target within comparing all the other future prop firms. And if you haven't never traded futures and you want to sign up with the best prop firm, I also made a video about comparing all of them. And I think that really sums it up. It's also the last day for the Take Profit Trader discount code, 40% off and no activation fee. Really good offer. And the links for that are all in the description. If you're interested in the trading journal, we have this link down here. If you want to join us also during the London session live streams, there's a link for it right here. Our WOP shop, or also up here, where you can get either just live stream access or the VIP membership, where you also get weekly outlooks, access to all the indicators, like for example the ICT all-in-one indicator that I have on my chart right here. That's drawing all these fancy lines for me. Previous day, previous high, low. Basically 25 little indicators in one. So you don't have to have 10 indicators on your chart. You can control them all from your control panel. All right, that's gonna be it for me today. Caught the long, lost on the short. NQ keeps on going higher. Keep an eye on all these levels. We are about to reach into the daily bearish volume imbalance, the 50% of this entire movement to the downside. So we could really see some rejection around here. 50% from this high all the way to this low comes in at 4403. A 000 level, 4400, paired with a daily bearish share value gap. We're simply going to push above it and then start to retrace, or we reject from here after having taken previous week, previous day's high, like we spoke about in the VIP weekly outlook, and retrace to fill in some of these inefficiencies down here eventually. All right. Let's see, any last minute questions? Nope. And also not on YouTube. Sounds good. With Take Profit Trader or with Apex? Because, well, I'd say if you haven't watched the prop firm comparison video on my YouTube channel, make sure to watch it. Because right now, actually, the Take Profit Trader discount, I know it is a little bit more of a expense initially at the beginning, because you spend $100 on the 50K challenge, but afterwards you don't have to pay for the activation fee. With Apex right now, you spend $15 on a 50K account, but if you pass it, you have to pay a activation fee of $160 US. Then you end up at $175 spent for the challenge, and you cannot withdraw on day one like you, for example, can with Take Profit Trader. Just make sure to check out the future funding firm comparison that I have on my YouTube channel. Let's load it up here quickly. View your channel, should be that first video right here. All you need to know: Take Profit Trader, Topstep, Trade Day, My Funded Futures, Elite Trader Funding, and Apex, all compared in one video. Make sure to check that out before signing up, because you don't want to make any mistakes. Some prop firms are better than others. It also depends on your trading style and your technique, approach, strategy, whatever. And all right, guys, that's gonna sum up, or it's gonna conclude today's live stream. I hope you enjoyed watching it. If you do have any questions for Apex or Take Profit Trader, choose here. Well, I kind of mentioned both. Apex or Take Profit Trader? I need that answer. For Apex, the discount code is SAFE90. And for TPT, the discount code is AZ Trading. And for Trade Day, let's check it out. I always put it right in here. Let me modify it. Save 90.